Well, if you caught the show on Monday, and of course you did, you might remember that
scenarios.
Carter was sounding the alarm that an October sell-off could be on the way. Here's what he saw in the charts.
In this scenario, we are down hard here in October. We're backing and filling a bit in November, and then we plunge again as low as 2,400 and have a few weeks of strength ending at 2,650. Now, keep in mind, to get down to 2,400, that'd be about a 19% sell-off.
Despite today's comeback, stocks are still down big this month. So where are we headed next? Carter, why don't you head over to the plasma, break it down.
A lot of guesswork. Let's go do some guessing and some analyzing and see what we can come up with. But obviously slippery. People, I think, have been hurt and then perhaps a little oversold and a little bit of a bounce. But all to what end? So chart of the S&P, no judgments, annotations by me. Let's put in some lines. One thing to look at. 3 distinct sell-offs. 1, 2, 3. What percentages are they? The first one, down 7.6, down 6.8, down 5.5. How about the duration of the sell-offs? 22 days, 14 days, 15 days. So a lot of things. But here's the thing that's maybe a little bit worse about this one, in that we did not make a new high. That is a bit of a problem. This was an incremental new high, but really what this was a failure to make a new high. So let's draw some lines. We've broken trend. And interestingly, today's kickback went right to that trend line and stopped. And then if you put in our flat top, there it is. Not a great setup. Again, I think the bias is to the downside, and that what we've seen in terms of trouble is just the precursor to more trouble.
All right, Carter, why don't you come on back?
I thought there were 6 scenarios on Monday that he talked about.
You thought that on Monday as well, and you're wrong today. You're on Monday because there aren't 6.
Sweet laugh track. So, so what look, you have to pay heed what Carter's talking about. Think about Apple, which didn't make that new high. Think about J.P. Morgan, which maybe but really didn't hold that new high. Think about Home Depot. So we're talking about very, very popular crowded trades that certainly people have been able to have some justification on valuation and certainly some rotation element. And I would agree, those have been very disappointing moves.
Yeah, even Costco falls into that.
Yeah,
category.
I mean, and again, these are also crowded trades, right? Because they've been working. So you see a lot of people in the same names, and now all of a sudden things are starting to break down. So you don't have to have your bear suit on. You don't have to say the world's coming to the end, but you can also recognize that, wait a second, maybe it's not as easy as it was before. We don't know what the economy is going to do. The odds of us getting a trade deal, I think, are lower than they have ever been over the last year or so. So there's a lot of things out there that you just don't need to buy stocks today.
So I have a question for Carter on that chart.
Yes,
where
please.
it broke down below. Where's the next stop? I didn't see where.
So that's guesswork too, but there are reference points. We know there's the June 3rd low. That's another 3-4%. And then there's an unfilled gap a bit lower than that. So I think those are in play. I guess the real issue is this, and this is independent of the charts. I mean,
I'm sorry, Carter. What is the June 3rd? Is it 28.15 or something?
Yeah,
like that?
28,
Okay.
and then a little bit lower than that. But the issue is, for markets to go higher, it's one of two things, right? It is either multiple expansion or it is earnings growth. And that, at the end of the day, is the bottom line. Which of those, or is it a little bit of both of those, is actually going to happen, and why?
Right.
So anyone can make a case for either of those right here? Multiple expansion?
BK can't.
Okay, there's one.
Rhetorical questions he's asking, Mel.
I
think you know the answer
Yeah.
in Carter's mind. We've been in a range for a long time. There's a lot of ammunition for both sides, and frankly, again, the glass half full is we've digested an enormous amount of headwinds that if we actually get some solutions here and some clarity even on where the Fed is going, and we get some earnings that give some more clarity into all these CEOs who are either making or not making these investment decisions in their business, the markets have been sideways. Let's be clear.
Last question, Carter, and that is, I mean, does it make a difference that expectations going to earnings are so low, that expectations for a lot of things have been ratcheted lower, and so therefore, you know, the ability to beat is much greater and bring the markets higher?
I think consensus for a decline about 3.7%, and that would be the third year-over-year quarterly decline in a row. You know, that's, you can say, is the bar so low we beat that?
Yeah.
I don't know. So far, the things that we've heard have not been very encouraging. There's not been a lot of beats, and the ones that have beat have been tepid in terms of their price action.
like Nike? Like, would you say Nike?
Like Nike. I mean, Nike hardly broke out, whereas the ones that have collapsed, like FedEx and Carnival Cruise, have been a disaster.
Fresh new lows for FedEx today, by the way.